Hello, everyone. Grayson Geiler here with SES Services Weekly. I like to pick a topic out of the financial media and go a little further into depth. This week, I'm going to be off script a little bit with so much doom propaganda out there about our financial situation. A lot of people have been asking me about developing a financial plan B. So we're going to talk about that today. So obviously developing a financial plan B is a pretty big topic. So bear with me. This week we're going to be at this a little longer than we normally are. Let me start with a baseline when we're talking about developing a financial plan B or a hedge against, pending economic monetary system doom. I like to start with a baseline of, look, the US dollar is not going to zero anytime soon. So when I'm talking about developing a plan B, I'm talking about starting to build a hedge, some alternatives, start to deploy some assets away from the typical monetary system that we've been taught to believe in for good reason, actually, over the last 40 or 50 years. Let's take a look at some of the reasons, starting off to debunk the doomsday newsletter guys talking about how the US dollar is going to go to zero. First and foremost, it's one of Newton's laws that a body in motion is going to stay in motion until acted upon. Keep in mind, the US dollar and the world's monetary system was developed by the United States after World War II. We put the IMF together, we put the World Bank together. Some of that structure has changed, of course, in the last, 70, 80 years. But a lot of it still is intact. Of course, Nixon took the dollar, the gold backing off the dollar formally in 1971. There are some other things that have changed. We've added SWIFT codes. The international system is the fluidity of money movement has gotten much smoother, obviously, over the last few decades. But for the most part, the monetary system that we developed, the United States developed, is still in place. We are the official currency of 12 countries, not just the United States, 11 other countries. The US dollar is the official currency. It's also the de facto currency of many other countries all over Latin America. As an American, you can fly to much of Latin America, hand out dollars, and get the goods and services that you're looking for. Southeast Asia, that's going on. The military presence of the United States, of course, is a supporting function of that, for better or worse. Don't want to get too political with our discussion today, but for better or worse, the military involvement of the U.S. worldwide has a lot to do with the US dollar continuing its strength through the decades. Keep in mind, 80% of international trading transactions take place in the US dollar when we're talking about outside the Eurozone. And I'm not going to go too far into depth about the euro itself, but it was developed by the same bankers that developed our existing monetary system. Even the euro is a derivative of the US dollar. But outside of the Eurozone, 80% of international trading transactions go on in the US dollar. Central banks worldwide are aggregating assets for economic stability, and 60% of those assets are denominated in the US dollars. Maybe one of the most important parts about the US dollar being the international currency is the fact that our treasuries, and especially the 10-year treasury, it's the most liquid asset in the world for central bankers to move money in and out of. There's a reason that central bankers worldwide are using the US dollar, using the treasuries to store their assets, to store their purchasing power. Here's an interesting one too. 90% of FX currency trades on a daily basis, lots and lots of currency traders, hundreds of billions of dollars move on a regular basis. 90% of those transactions have the US dollar on one side, on the sell or the buy side of those transactions. It's really the U.S. dollar and everything else, then everything else. It's not a situation where different currencies are vying for the top spot. So much of the technology that is going parabolic today is denominated in U.S. dollars. It's U.S. based or U.S. dollar based. So in the end, look, it is a dollar-based world. We have some problems with the U.S. dollar that I'm going to go through in a minute here, but just keep in mind this is not coming apart tomorrow. The fact that the Federal Reserve has raised interest rates as quickly as they have, and the system hasn't imploded, is absolute proof. This thing isn't going to zero tomorrow. Well, let's talk about some of the U.S. dollar problems that we have, and if we're looking into a plan B, a financial plan B, some of these things are going to come to the forefront of the discussion. Lots and lots of doomsdayers are highlighting these things, but we absolutely have to talk. We talk about it on our weekly in our weekly discussions all the time. And I have really big problems with the behavior of the Federal Reserve. And this isn't Monday morning quarterbacking. I was saying real time during the COVID crisis or after the COVID crisis, how reckless the Federal Reserve was acting. They simply conjured $6 trillion out of thin air and started pushing it into our financial markets. They engendered not a red hot, a white hot residential real estate market. I mean, to the point where the market got completely distorted by the actions of the Federal Reserve. Now, today, they're not tapping on the brakes, they're standing on the brakes. It's pretty reckless. I've got a big problem with it. And, at the end of the day, it has to make one worry. The US dollar is the storage of my wealth, storing my purchasing power in something that they can conjure $6 trillion out of thin air just on a whim. That makes me nervous. FDIC insurance, that's another one that's a little bit crazy. That's legislated by Congress, what FDIC insurance is. It protects people's deposits in our banking system. It was a huge ordeal in the 2008 meltdown that FDIC insurance was only $100,000. Advocates for a higher insurance were saying, look, that was from the $100,000 number was born of the early 80s, the savings and loan crisis in the early 80s. Well, we need a higher number now. Well, Hank Paulson, the Treasury Secretary in 2008, and Congress sponsored a bill that had to be voted on, I think, by the 110th Congress. Then George W. Bush had to sign into law that $100,000 protection on your deposits in banks is now $250,000 protection on your deposits in banks. That was a huge ordeal. Well, rewind to this last February, and the Federal Reserve took it upon itself during the Silicon Valley Bank crisis, among other banks, to simply back every deposit in these banks. Effectively, FDIC insurance became $500 million overnight. I mean, so the Federal Reserve is changing rules on the fly, shooting from the hip. It's nervous. We need to look further into this and think about some of these things. On the fiscal side, everyone knows our government, the budget of our government it's gotten on to absurd. $32 trillion, and the interest payments on this $32 trillion as the Fed raises interest rates, it's going to be the number one budget item if this continues. It's already, I think, the fourth largest budget item. It's going to overtake military spending. Interest payments on our debt is going to be, I believe, by the end of the year, the third largest budget item. This is getting crazy. We've got a 6% budget deficit, meaning our federal government is spending 6% of GDP more than they're bringing in taxes. That's a number during a bad, deep recession. The government should be going. It's getting absolutely absurd. Um, some other points, we're abusing the world reserve currency status of the US dollar. Look, it doesn't matter what you feel about the war in Ukraine and Russia politically, but to consider the monetary system, Russia is one of the most resource rich countries on the planet. They were willing to mine all their platinum, drill all their oil, grow all their wheat, and send it around to the rest of the world for US dollars. They were willing to play that game. We told them, you can't play in that game anymore. We're forcing them to create an alternative for the US dollar. We're making them do it. They are doing it. You take a look at some student loan debt issues here. Are we going to just wipe $1.6 trillion off of the balance sheet of U.S. Student loan debt? It's crazy. We've got an aging population. You look at the history of fiat currencies, it goes on and on and on. There are serious reasons to think about a financial plan B and worry about the status of the US dollar. Again, not imminent doom, but something to build for the future. Okay, so if we're talking about, well, the US dollar may start to, the value may start to erode, or an accelerating pace of erosion of the value of the US dollar, what are the alternatives? Historically, people would talk about different currencies, maybe the British pound or the Japanese yen or something like that. Move out of the country, get your assets denominated in a different currency. I think we've established that that's not going to help you. The different currencies may increase in value versus the US dollar for the short to medium term. It's not a long-term strategy. Every currency on the planet is a derivative of the US dollar. If the US dollar comes apart, the entire world's gonna feel the pain. Cryptocurrency, now keep in mind, and we've talked about this in our casts several different times. There are two distinctly different types of cryptocurrency. We've got a central bank sponsored cryptocurrency that they have 100% control of, and that's a completely different animal than Bitcoin. So first, about the central bank designed cryptos, there is nothing worse that could happen to our economic situation. That is totalitarian control of an economy by the central bank, by the government. I cannot stress how disastrous that would be for our situation. The good news is Nigeria is the one larger economy that's tried it. It's already been a disaster, already come apart. Hopefully we don't get to that point, but just keep calling Congress people and telling them, keep calling your senators, keep putting out there, we cannot tolerate a central bank designed cryptocurrency. That would be disaster for everyone and their personal liberties. Now, when we're talking about Bitcoin, this is not controllable by a central bank, not designed to expire at a certain date. If the Bitcoin organizers feel no, it won't happen, it can't happen. Every individual, it's a libertarian's wonderland. Every individual is on their own. I appreciate the core competency of the Bitcoin cryptocurrencies. Not going to go too far into it. I'm relatively agnostic. I see some problems with it. It's not, in my opinion, a good alternative for a significant portion of your wealth. If you want to speculate with a small portion of your wealth, knock yourself out. I have a tough time looking at it as a viable alternative to the US dollar. Simply the price volatility makes it uneligible as the center of a monetary system. Too much price volatility, people cannot plan. So that's not going to happen. Of course, that leads us to gold. Gold is money. Gold always has been money since the dawn of civilization or thereabouts. Gold always will be money. And so that's a lot of our discussion today. But one thing I want to talk about is some of the problems historically that we've had with gold. I've done a lot of talks over the last 10, 15 years about gold as a good alternative, as a storage of wealth. The number one question I get is about storage. Okay, well, if I buy gold, where am I going to store it? You certainly can't put it in a safe deposit box. Are you going to put it in your closet? Or are you going to pay some professional? Gold storage is a centuries-old business, and there's a whole network of safe storage facilities around the globe, but they're charging you typically about 75 basis points or 0.75% annually. Well, that can be annoying. That can add up as time goes on. Well, then let's just buy it in our IRA on the stock exchange. There are some ETFs that are just gold, silver ownership, platinum ownership, those types of things. There are also fees associated with those. So that doesn't really fix the problem. Some of the other problems just typically people have when we talk about gold is the doom propaganda. It's so polarizing. You have pundits talking about the US dollar is going to zero. You have to pile all your money into gold, and people just don't see a bridge between here and avoiding disaster, and it tends to polarize people. And with good reason, it turns a lot of reasonable investors off. The liquidity, accessibility, and visibility of it, if someone figures out how to store the gold that they buy, well, then they just don't feel like it's very accessible. How would I buy and sell? Am I going to go to just a coin shop down the street to sell gold if I have some US dollar needs? The visibility of it, I just don't feel like I know exactly what I have. I'm not gonna sit in my closet and dig through gold coins all day. The numismatic value of some coins, some people when they're buying gold with a gold shop, they get talked into buying numismatic, meaning single gold coins that have historical value. That ends up being a tough game for people that don't understand. They end up playing a game they don't understand the rules to. So we caution people against buying the numismatically valued coins, because it's not. It needs to be your job. It needs to be a significant part of your focus. If you're going to, it would be just like buying precious art. You need to know that market, or that market is going to take advantage of you. So these are some historical problems with gold. But let's look at it from a historical perspective. Is gold even really worth talking about? When you compare, okay, it's a store of value. Well, I've heard inflation has been rocketing higher over the last year, and gold didn't really go higher. So is it really a store of value? Let's take a long-term perspective, and I think you'll see really that it is. So what we decided to show a comparison, anytime we're talking about a financial plan B or gold over history, we're going to oversimplify things. Otherwise, we'll be here all day. So this is the oversimplification that we chose. What if at the end of 1974, when gold became available again for individual investors, start in 1975, what if we put $100,000, just bought gold coins with $100,000, and then we compared it to, well, what if we just had 1-year CDs that we're rolling and rolling over year? So we're earning interest. Of course, that's one of the biggest criticisms of gold. Well, it's a dead asset. Warren Buffett talks about that. Well, if it's sitting in your closet, what good is it doing? Some people feel like it's saving their purchasing power. Okay, well, let's compare that to people that had US dollars and were deploying and investing it in a low risk way. So we put this together just looking at it, and a 1-year rolling CD, those numbers aren't as precise as you might think. So keep in mind, this isn't perfectly precise historically speaking, but we did the best we could, and it took a lot of research. But just rolling 1-year CDs, starting with $100,000 beginning in 1975, end of last year, end of 2022, you would have made tenfold your money. You'd have over $1 million. For this purpose, let's not talk about the taxes or the inflation eroding the value. You made tenfold your money. Okay, well, that's investing. It's a low risk investing, but that's investing. Does gold sitting in your closet even compete? Well, here's $100,000 of gold starting in 1975, January 1st, at 100 and change an ounce. Then that has increased almost tenfold as well. It's actually pretty surprising that these numbers turn out so similar. And for some people, this might be just this snapshot might be what you're looking for. Look, I'm going to buy some gold. I'm going to figure out how to hold it. I don't want to pay fees. I'll maybe a Folgers can in the backyard. Whatever makes you feel better. That is your disaster insurance. You will have purchasing power if you buy gold and hold it. That is a 47-year trend. I think that, and again, for some people, that's the end of the discussion, and I'm completely fine with that. But then I started thinking about, well, what if there were, and I'm not talking about investing in gold in a leveraged way. I'm not talking about buying a bunch of gold mining stocks and taking a lot of risk, because that's a tough business. What if there were a way to invest in gold and have a low risk investment comparison, kind of like CDs? What if that existed? Could we look at the same history, a 47-year history, compare it to, well, okay, low risk rolling 1-year CDs, a gold yielding account, meaning a gold account that was paying interest in gold on the gold that was in the account. Well, of course, we already saw this number, over 47 years rolling CDs, you would have made 10 times your money. A similar low risk investing in gold, considering what's happened to the price of gold, and wow, drastically different, 30 times your money over that same period of time. Well, that's a pretty compelling message. The question is, how do we do that? Is there a way that we can invest in gold, without the speculative excesses of mining and fees and all that kind of crazy stuff? Well, we have found a company that, strangely enough, they have operations all over the world, but they're based in Scottsdale, Arizona. They've been doing this for 7 years. They essentially created a gold marketplace and silver, where depositors are earning interest on gold and silver in gold and silver terms. Surprisingly, there are a lot of businesses out there that need capital for their operation that would rather borrow in gold and silver terms rather than in US dollar terms. And the obvious example is a jewelry manufacturer. So if you're making jewelry and you need capital, would you rather borrow dollars and buy the gold to put your value added on? Or would you rather borrow gold? Because if you're borrowing dollars and buying the gold, and then the price of gold crashes, the jewelry you're making is worth a lot less, but you still owe those dollars. Well, if you're borrowing gold and you're paying interest in gold terms, you put your value added on making jewelry, well, you're going to get paid. You're paying back gold. You're paying interest in gold. There's no price risk. Gold can be doing this in US dollar terms in the short term, and it doesn't affect you. So there actually are many businesses, not just jewelry manufacturers, that they need capital and they would rather borrow in terms of gold and silver. So this company, again, based in Scottsdale, Arizona, they've made a marketplace where depositors can earn interest and borrowers can remove the hedging needs, they're removing their price risk of the value of those metals. So as a plan B, an investor can deposit, again, I'm not talking about pushing all US dollar assets into something like this, but to start to build a gold and silver savings account to where you can have an alternative. And if we do have some crazy dislocations in the value of the US dollar, you've got a different alternative. And these guys have put together, these guys meaning the business in Scottsdale that has created this marketplace, they've standardized it very well. They've removed the vast majority of the risk. It's a well-run company and they're growing very fast. And it's literally a micro monetary system that is working. Does it continue to get bigger? It's kind of a grassroots gold standard monetary system rather than a top-down gold standard monetary system, which I think we can all agree will never happen. Jay Powell, Federal Reserve Chair, is never going to come out and tell you that we're backed by gold again. But this is a wonderful starting point on ramp for a plan B. We have signed an associate agreement with this company, and we are showing we're putting out there talking about the opportunities that they are providing. If you are interested in this, please reach out to us. If you are a no risk investor, certainly you can just buy some gold and put it in your closet. I'm not going to discourage you from doing that. The chart that you're looking at is a very low risk 2.5% stretched out over 47 years. The returns that depositors of gold and silver in this company that I'm talking about is in that 2.5% range. It's very, very low risk, not setting the world on fire. There are some higher return opportunities for more aggressive investors, but this is just the baseline that I wanted to show you today. So thanks for your time. If you like the information that we're putting out there, smash the like button, subscribe to our channel, keep coming back, forward this to people that you may be interested in. I look forward to hearing from you if you're interested in looking further into this, but thanks for your time and we'll see you next week.